Good morning. It is Sunday morning, October 8th, 2023. I'm going to do a short market report, and I thought while I was doing some looking myself, I would just go ahead and record it. So let's go ahead and take a look at this standard risk disclaimer. I'm just going to look at these last two lines. Any stock index or ETF mentioned in this presentation is not a recommendation to buy or sell. All trading strategies are used at your own risk. Okay, I've opened HGSI. Now I want to get to where I'm going. This is the warehouse view. I want to go to top down analysis, indexes, and ETFs, and then I have to go into my designer. I'm going to go to user groups, market analysis, user groups, major markets plus. I'll click through to that. Close this, and now I want to change charts. First of all, let's go to the NASDAQ composite. And this is a weekly chart. Want to get up to my market charts, and I'm going to use this one right here. It's number 1B, and I'll just leave the weekly chart as a black chart. But you can see that we had a big day on Friday. If this volume is correct, it looks like it was below average volume. I need to get an arrow up here, open some drawing tools. Okay, if you look here, it says less than average. It was a wide spread and the close was very high, and the sentiment's bullish because we had an effort to rise here. You can see that it's back into the gap. It hasn't quite filled that gap yet. But it was a big day, but this is really surprising, the lack of volume or lack of conviction. So that's an anomaly. Now, the advancing versus declining stocks, not overwhelmingly positive. It is positive, but not overwhelmingly positive. Let's bring up the alternate. Click on this and hit alternate I. Bring this up, scroll down. Another drawing tool here. I'll just use that arrow and point out the advancing stocks were a little over 1,000. Oh, that's not the correct day. Sorry. Okay, advancing stocks 1943, decliners 1149, just 2 to 1 on the NASDAQ stocks. That seems low. Advancing volume versus declining volume, about 2.5 to 1. New highs 24, new lows 139. A lot of those new lows, you have to remember, were set early in the day when there was a huge sell-off from the prior day's close to the open right here. So a lot of those stocks established new lows. Now, IBD has called this a follow-through day on Friday. We'll see. Look at the weekly volume. You can see that it was less than the prior week. So I'm not so convinced it was a follow-through day, but more of a shakeout, which created huge liquidity. Fear took over. Traders dumped their stocks, and then the buyers came in and had a good day on the long side. Let's dig into this a little bit further. I'm going to move away from, I have to take control of this again. Move away from this chart. Get rid of this. And I'm not going to look at the other indexes here. Well, I'll look at the SOX because it had a big day, but there's no volume associated with it. So let's move from the major markets plus to the broad market indices, and then I'm going to change charts here. I'm going to go down into my HGSI index charts, and let's just go to chart number 4, and I'm going to look at the NASDAQ 100. Because we have volume here. This is an index created by HGSI. Now you can see the strength here, 88% advancing, almost to 89%. So it was a big day there. But let's go down to the S&P 1500 and see how that looks. It was strong, 70% advancers, 28% decliners. Now I want to use the S&P 1500 and look at the percent above and below these moving averages. You can see the percentage of stocks above the 20-day. It's still below the 50-day moving average line, but it's turned up. It's turned up on the 30, the 50, the 20, the 30, the 50. The 200 is still going down, so you can see that this is a weak market. When this line crosses here on the 200 with the S&P 1500, that's often a sign that the market is weak and getting weaker. We're not seeing much upturn here, but on the shorter time periods, we are. Now I'm going to move back up to percent above. Remember, I'm in the NASDAQ 100 here, and you can see how the money was flowing into this index. The number of stocks that moved above their 20-day moving average, their 30. Not above it yet, not above the 50 either, but turned up sharply, and we can even see some movement down here on the 200-day. Now the next step is I'm going to just change this to a daily VPA black chart. And I want to go into my user smart groups. And I'm going to look at money flow in and out. This one here requires that the industries be up one day and the beginning of the week. And how many are in here? 123. This one doesn't require this. No industry group percentage change. There's 186. So let's look at this one. This shows some consistency since the beginning of the week. And I'm sorted on raw combo. I need to change my view. I need to go down to my scorecard view because I want to see the industry and the sector. Sorted on raw combo. I want to be on not demand, I want to be on industry percentage price change. And you can see some groups there where the strength was on the groups. If you look down this column right here, a lot of application software. And remember, this money flow group requires that the industry be up one day and up since the beginning of the week. And this is 5 days here. So you can see these groups, looking back, were up over those time periods. Here's semi-manufacturing, semi-devices. If I bring this up, you get a much clearer picture. Application software, infrastructure software, internet media, IT services, semiconductors, e-commerce, and so on. So this is the money flow in with the group requirement. Let's just go down one more. This one doesn't have a 5-day group requirement. As you can see, there's red in this column. But we're not going to see a lot of difference, it doesn't look like, in what the dominant groups were. So, clearly, a tech move on the money flow in. Now, let's drop down to the money flow out. 84 in the group that requires both the industries be down Friday and for 5 days. What do we have here? Household products, investment companies, REITs, medical equipment. Well, you can see it right here. And let's go to the next one. There's 84 here in the not requiring, down both 1 and 5 days. 160 in here, REITs, biotech. You can see some of these groups were up on Friday. It was such a strong day. But the money flow is considered out because all of these stocks, their prices were down for the day. So even though there was some strength in some of the groups, these stocks were down, and you can tell where they closed within their range right here. Now I'm in my scorecard view, sorted on industry percentage price change. Now I'm going to just go back up to the money flow in, the second group that doesn't require, and I want to look over here at the VPA signals. You can see that there's a lot of VPA flags here, a lot of effort to rise. If I sort on this, the efforts to rise, you can see a lot of tests here, efforts to rise. Just a real strong day on this money flow. Now, a good place to possibly look for some trades would be to start with the test for supply or strength seen returning. Let's just bring some of these up and see what they look like. Okay, here's your test. Look at these VPA flags that were forming along this support area here. A one-day shakeout. If I put a crosshair on here, you can see that this shakeout day, the volume was light, which means it was a shakeout, and then we have an effort to rise, and then a tester traded down, but buyers came in. It's got resistance coming up over here, but it's got a higher low, looks like about an equal low here, but a much higher low than this low right here, so it's starting to trend up. Let's see what the relative strength is, 90. Now IBD, this weekend they have some stock suggestion buys. I'm going to cover some of those quickly. And their main criteria is RS, high RS. So this has an RS of 90. Let's look at one here. Construction Partners has an RS of 94, HGSI, and also 99 on Kirkpatrick, which requires 26 weekly closes. And this one is broken out here already. So the risk is high if you chase these. These are often the type of stocks that IBD will suggest breakout stocks if the market's strong, and with their follow-through day designation this weekend, they would certainly consider that if it meets the CAN-SLIM requirements. That's another thing. So what I want to do here is, I just thought of this, I'm going to go down here to earnings momentum, and I have some scans in here. CAN-SLIM type stocks, 20% revenue and EPS growth, fan up. And if we just stay in the money flow and look at these stocks here. In fact, this is one of the stocks they recommend in IBD this weekend. Paccar, I think that's how it's pronounced. And what do they like about it? Well, the relative strength is 89, 93 on the Kirkpatrick. Not quite up in the 90s, but these are commercial vehicles, and they like the earnings growth, as you can see. Let's just put get that arrow back up here, and you can see that these are moving up. And then look at these numbers here. So this, by applying this to the money flow, the CAN-SLIM to the money flow, we can see candidates that we could possibly use here. Let's go through a few of these. I think this one may be in their list too, maybe not, but you can see the good earnings growth. You can see the VPA flags right here at the support area. Test, confirmation, strength in returning, confirmation of that, and moved up. And now we have strength in returning. If it can get past this area, maybe it has a chance to go. What's the group rank? 91. What I like to do is I like to go down here to this one also. This is view number 3. You can see how a stock is doing compared to its group. If the green line is up, it's outperforming the group. This is the group line. If the yellow line is up, it's outperforming the S&P. Now this weekly chart here, they like to use, IBD, I believe, uses just primarily weekly charts for their relative strength, and you can see that this stock is flat against the S&P right now, but on the daily chart it turned up. Weekly chart looks like it's flat. Let's go through a couple more of these. I don't want this to be too long, but okay, here's ANET, and you can see that it is moving up. These are the places you should really look to buy or to start looking for a stock when you start seeing these tests. Now, this was a test. This is high volume up bar. These are efforts to rise on these CanSlim stocks. Now, I'm going to quickly go to, I put a quick list together, if I can find it, IBD suggestions. Okay, I have this filter on, and you can see this right here. 3 securities out of 10. I've got 10 securities in the group, and 3 of them came up under the CanSlim type stocks with money flow. So these are 3 that you may, if you follow their philosophy, you may want to look at. Arch Capital, outperforming over here. Let's take a look here. 93 and 93 on the relative strength. This one's 93 and 97. I thought it was in there, and it is. And then this one I looked at too. So these are 3 of their suggestions. Now, if I release this filter, these are the 10 that were mentioned either as stocks to consider buying or to look at in the newspaper. And the characteristics are, let's see what the RS is. Well, most of them are in the 90s. Here's NVIDIA, of course. A little late to be chased. Well, it's not too late. I shouldn't say that. But you can see where the ideal buy points were down here when it was under accumulation. It's outperforming the S&P. The group's up. It's outperforming its group. It's outperforming the S&P here. Metastock, Meta Platforms. It's under a long accumulation period. The weekly is really strong. You can see the RS here is moving up. ANET, I looked at that. Arch Capital. ServiceNow, I don't really know why this is included, but I guess it's under accumulation here with an effort to ride. Very expensive stock. CMA Group, pretty expensive too. This, you can see how well these VPA flags, both on the weekly and the daily, they really give insight. And here would be a buy point above the resistance on that. Now you're chasing. Paccar, I looked at that. Microsoft was mentioned as a possible stock. It is outperforming the S&P 500, and the group's going up. It's moving up with the group, slightly outperforming the group. Apple, I don't know about Apple. They just mentioned it. This really wasn't a stock to buy. I think it was mentioned in an article about consistent earnings growth and so on. So there were only 9. This is the index. This is the IBD index. And you can see that it's emerging, it looks like. Okay, I'm going to end it here. I've gone 19 minutes. I just wanted to give you a quick rundown of how I look at the markets. Yeah, it was a strong day, but I'm concerned about that lack of volume, and with so much going on now in the Middle East and in Washington, we'll see if it follows through. It could just be a trap day. Thank you for listening, and be careful.